Silver's GFC pattern has repeated. Welcome to another Insights brought to you by Ainslie Bullion and the Gold and Silver Standard. Today we're talking about the price of silver, specifically how its past can potentially predict its future. And we have Sam joining us again on the show. Welcome back to Sam. He's a regular contributor, and he wrote this morning's article all about the silver price on the Ainslie website. I'll put a link below to that. So Sam, we saw a huge bull run in silver back in 2011. It went to all the way to nearly 50 US dollars. Now, if we put that into today's Australian dollar price, that would be 76 Australian dollars. Now, I believe that in this article this morning, you're talking about the clear similarities between then and now. So if you could let us know, what are some of the telltale signs that you look for that could help us predict a rise in silver this time around?
Well, silver is really volatile and it does have some pretty surprising movements. It seems a little bit hard to track, but there is one clear thing that was reported in 24th of November 2008, and that was a roughly 9.2% rise in one day in the silver price. So if you put that into perspective of people's yearly investments, most people would be pretty happy with 9% in a year on something, but this is one day. And that's a pretty shocking occurrence that made it into a lot of news articles at the time. Now, what came after that was a sort of upward rising pattern that led into that huge bull run you're talking about, which was essentially a 373% rise across just over 2 years. Now, if you look recently, in the 3rd of October 2022, so just late last year, the biggest daily increase since then occurred, and that was just under a 9% rise in one day. So the biggest day since the one that kicked off the bull run starting in 2008 has just happened at the end of last year.
Okay, so it definitely seems like some kind of similarities happening there. Now, out of interest, what makes these occurrences similar? Are there any underlying conditions that happened back then and are happening now that you see are the same?
Yeah, so mentioning 2008, one thing comes to mind, and that's obviously the GFC. Now, that was kind of a contained crisis in the way that, to be honest, it was mostly US and it was mostly to do with housing. If we look at what happened in 2020, that was much more global and it was a much sharper sell off in risk markets. In fact, it was a sharper sell off than the Great Depression. But things that look similar on the chart, if you actually highlight the areas around those daily rises that happened in November 2008 and October 2022, it looks almost like a copy and paste. The pattern looks the same. Both of them are bounces, so both of them are recoveries in a way. Both are coming after recessions. Both are nearly the same percentage daily rise, and they're record daily rises as bounces. So very similar.
Now, of course, we're not saying that just because it happened back then and it looks like it's playing out similar, it's definitely going to occur. But it's very
No.
important to look at the past to potentially predict the future. So, of course, this is not financial advice from Ainslie Bullion, but it's definitely worth looking at. Now, based on the sort of the big zoom out, the more macro view, are there any sort of overall technicals that are looking good on the macro level for you?
Yeah, so there is a quite a bullish candle pattern that happened after 2020 and led to an initial aggressive increase. And you can show some of my analysis on the screen. It actually flipped the 200-week moving average to the green. And there was a retracement, as there oftentimes is after a big run upward. But after that 9% rise, it's stayed in the green since then. So we're still in the green up until this point on the 200-week moving average combined with a MACD.
And just out of interest, I do the technical analysis on Tuesdays on the Ainslie Bullion channel on YouTube and, of course, the other socials as well. And we did have, just in the recent few weeks, we've had that breakout of the symmetrical triangle pattern. And we came up to the very, very, I think, infamous level of 26 US dollars, which was and has been through 2011 to 2013, after the big peak of $50 US. It was a massive support level. At least it was 3 or 4 times it hit that line in the sand of 26. And back in 2011, 2013, we never thought that it would break down that 26 level. And then April of 2013, it broke through 26. Now, since then, it's attempted to break out and hold above, but it hasn't done so. It's been 3 or 4 times where it's broken out, but failed to hold for a significant period of time. We've just seen that rise again. It's just gone back down through 26, but a lot of people feel that this retest of this current area might be a level to back up the truck, as they say. Of course, not financial advice and all that. Now, what I wanted to talk about was Janet Yellen. And the debt ceiling, of course, big news at the moment. We've been talking about it a lot on Insights just recently. Any news happening in the background regarding that could have effect on the precious metals prices and silver in particular that you've been looking at technically?
Yes, the debt ceiling story is a great story because it essentially covers all the other stories, everything else that's happening in the background. Now, speaking of Janet Yellen, other news in regard to her is that she actually met late last week with banking executives. So, executives from JP Morgan, from Citibank, the biggest banks in America, some of the biggest banks in the world. And after the meeting, she came out and, according to CNN, said that there may be a need for more mergers in regard to banks. Now, in the same speech, she also called for people to essentially relax, saying that the US banking system is on a strong, solid foundation. There's nothing to worry about, which is interesting because if there's nothing to worry about, why do these big banks need to consolidate all the smaller banks? It doesn't really make sense. So, and that's what she said right after her meeting with those big bank executives. Now, funnily enough, the article I linked to from CNN talks about an aggressive sort of very fair bidding process in which JP Morgan got to acquire First Republic. They didn't really mention that what they were acquiring was worth way more than what they were actually spending. So it wasn't so much a competitive bidding process as much as it was a sweetheart deal.
Interesting. Now, the last question I have for you is more about the other instruments that we can look at in the economy, maybe other charts, etc., that help to predict precious metals and in particular silver. So, in your personal opinion, is there any other things that we can look at, instruments we can look at to help predict where silver might be going in the not too distant future?
Yes, well, the common one is the S&P 500, and that's just tested a 2% fall in the last 2 days. Now, there was the FOMC, so the minutes were released this morning, and that caused a bit of a pullback on a lot of things. But the FOMC minutes, they were essentially saying the Fed is divided, which is not really what bulls want to hear. They don't want to hear even the prospect of future rate hikes. They want to hear clearly something might break, we need to pivot, but that's not what they got. So that temporary pullback, we'll see if that just continues to fall downward in regard to the S&P. Now, besides S&P, there's also AUD against USD. Now, that's just a currency pair, but a lot of people tend to ignore this for that reason. AUD USD is actually a really good metric for the global economic health. And one of the reasons for that is because the Australian dollar is used in, it's used essentially for Australian sales of iron ore to China. It's used to sell our resources to China, and then China uses those resources to make things and sell to the rest of the world. So if there's a slump in purchases in iron ore and things from Australia, that then shows down the track that industrial production might be down. So it's also a bit of it's used as a bit of a proxy for the Chinese currency as well. As you know, it's very hard to trade the Chinese yen. The government likes to control the price of it so they can have cheap exports. So instead of trading that, people tend to trade AUD USD. So it's a very good. It almost follows the S&P 500 a lot of times, but it can call out some fake bull runs as well. Now, what we see for AUD USD is it got smacked down to the 65-cent level. Ideal for AUD USD is around that 75-cent level. So we can sell cheap iron ore to China, but we can also buy our German cars you see down on every street in Australia. And that's actually the lowest point it's been this year. So using the global economic health, it's at the lowest point it's been.
Interesting. So that's a very interesting point. And of course, we have to look at the AUD USD price when considering the silver price and the precious metals price for us here in Australia. But it's very interesting how you're saying that you can look at it as a more macro indicator as well. And I didn't factor that in. So that's a really great bit of information for me too. And of course, for the viewers of Insights. This last question, I'm going to put you on the spot. And of course, not financial advice and all that stuff that we say here at Ainslie Bullion, but I want your personal opinion about where you think, how, the question we always get, how high can the silver price go? So give me the sort of the ballpark. What's your feeling in the next, let's say, 5-10 years? Are we talking triple digits? Are we talking more than that? What's your personal non-financial advice point of view?
Okay, so looking at the silver price, it's really interesting because you look at around the early 2000s when it was around $4. And if you remember people talking back then saying a $4 silver coin going to $5, that's just getting ridiculous. I mean, it only says $1 on the coin, and now we're doing 5 times the amount. 500% increase is silver overbought? Is it too high? Then when you understand that you're not actually looking at the value of silver going up, you're looking at the currency going down, right, and all the stimulus happening. Now we're waiting for a pivot, and the price of silver is already going up. It already looks like it's started a bull market in the last 6 months roughly. So if they pivot, it looks to me like silver could easily go up another 300 to 400%, just based off history. In fact, it could go much higher than that because diminishing returns, if they want to print enough to lift this economy now, it's going to have to be much bigger than before. So I would say about 400% minimum in the coming several years.
Well, look, I'm certainly on that bandwagon too, and it's great to finish off on a positive note. Of course, again, not financial advice or all that sort of stuff, as we always say here. And of course, if people want to purchase bullion, they can do so at ainsleyBullion.com.au. They can also look into the tokenized versions of bullion that we have fully backed. That's at goldsilverstandard.com. Sam, thank you so much for being on the show. We always love having you on with your macro indicators and your technical analysis. Of course, hopefully we will get you back next week. We'll get you to do an article, I think, a great regular contributor. And of course, to all the viewers out there, we want you to balance your wealth in an unbalanced world. Take care, and we'll see you next week.